Hello everyone and welcome to this video in the diary of a trader, and in this video I'll be going over the brief history of Forex trading and how it all started and how it came to be where it is today. So where did it begin? Well, in the beginning we had a bartering system where people would exchange goods and services with each other depending on the value that they put on those goods and services. Then we had commodities trading, where people exchanged commodities as a better measure of value. And then that became turned into coins or coinage that were made of gold, silver, and other materials. And then that turned into a standard system for buying and selling goods and services. After that, what we had was a paper currency. So out of the gold and silver coins that were deposited in banks, these banks then issued promissory notes, which are termed as paper currency, for the gold that you held. So they gave out notes, papers, for as a promise to pay based on the gold that was coins and gold and silver that was stored in the bank. And that created a gold standard for the currency being backed by the gold held at the bank. So you would have your notes exchanged for the gold and silver in the bank. Then after World War II, we had an organization called the IMF created, who dictated monetary policy, and all the currencies around the world were pegged to the dollar, and the dollar was also pegged to gold at $35 per ounce for the weight of the gold. So we had this standard for a while, and then we moved on from there. And in 1973, Richard Nixon, the president of the USA, took the USA and the dollar off the gold standard. So the link between the two was now cancelled, and currencies that allowed the currency to be printed in massive quantities, leading to a lot more currency than there was gold. So a lot of many notes, lots of currency can be printed. Then we moved on from there in the modern day system. After 1973 and that unpegging of the dollar, the IMF created a system of international exchange, but that exchange was only available between banks, and therefore only very large amounts of currency were exchanging hands. So in the 90s, when technology came in, we had the internet and more widespread use of computers, and with that technology we had advancements, and in 1994 the countries around the world floated their currencies on the market. And as the years went on, in 1998 a currency trading system was introduced in the USA, and the market opened up for anyone to trade currencies at the spot market prices for those currencies. And as that became available, we had more adoption, as well as institutions, other smaller companies, and as that adoption grew, the Forex market grew into the biggest market in the world, which is now several $1 trillion a day in volume. And it now continues on that basis, with most of the trading going on through the technology and the mass adoption, and those trading systems are now all pretty much online. So that's where we are right now, and that's where we have, this is where we have been, and we started with the basics of bartering commodities, turned into coins, turned into storage of gold, which was then given out through notes on promises, IOUs. Then we had all the currencies linked to the dollar after the war, and then the dollar linked to gold, then the dollar taken off the gold system, and then the technology created an almost the hugest market, biggest market in the world, and massive opportunities for anyone to trade those currencies. So thank you very much for watching, and do subscribe and receive more useful educational videos, and see you on the next one, on the next page in this Diary of a Trader. Thank you.